We're glad to have you back. Nigeria's gross domestic product GDP grew by 3.11% year-on-year in real terms in the first quarter of 2022, indicating the sixth consecutive quarter of positive growth by the Nigerian economy. The Q1 2022 growth rate was higher than the 0.51% growth rate recorded in the corresponding period of 2021 by 2.60% percentage points and lower than 3.98% recorded in Q4 of 2021 by 0.88 percentage points. A breakdown of the sectoral performance of the report shows that the oil sector of Nigerian economy contracted by 26.04% year-on-year in Q1 of 2022, indicating a decrease of 23.83 percentage points relative to rates recorded in the corresponding quarter of 2021. On the flip side, the non-oil sector grew by 6.08% in real terms during the reference quarter compared to the rate recorded same quarter of 2021. The non-oil sector was driven in the first quarter of 2022 mainly by ICT trade, financial and insurance, agriculture and manufacturing. Let's understand this better. And I'm being joined live from our Abuja studios by the president of the Association of Capital Market Academics of Nigeria, is the professor of finance and capital market, Professor Uche Uwaleke. Good afternoon, Prof. Thank you very much for joining us on the show. Well, there we are trying to link up with Professor Uwaleke. Prof.
Yeah, okay. Yeah, good afternoon. Good afternoon, Tolu. It's indeed my pleasure.
Thank you so much. I appreciate your time on the show today, despite your tight schedule. Q1 2021, just I take you a little back. We were at 0.51%. Q2, 5.01%. Q3 of the same 2021, 4.03%. Q4 2021, 3.98%. And now Q1 of 2022, we are at 3.11%. What is your reaction to this kind of growth?
Well, the first thing to notice is that at least the positive trajectory is continuing. So to a large extent, you could say the economy is on the path of economic recovery. We came out of recession in 2020, and since then, the economy has been on the positive path. So to that extent, it's cheering 3.11% GDP growth year on year for the first quarter of 2022. But having said that, it's also important to note that, just as you have rightly mentioned, the trend is actually on the decline. If you take it from the second quarter of 2021, when the growth rate peaked at 5.01% year on year, as you rightly mentioned, the third quarter of 2021, it came down to 4.03. The preceding quarter of the reference quarter, that's talking about the fourth quarter of 2021, it also came down to 3.98. And here we are talking about 3.11. And there's every indication that the next quarter will also witness a lower GDP growth rate. I say that because if you noticed, the second quarter of 2021, GDP grew by 5.01%. So the base for the calculation of GDP growth rate for the second quarter of 2022 is already high. So you should expect that the second quarter of 2022 will witness a slower growth rate in GDP, especially against the backdrop of what has happened recently, the MPC, jacking up the MPR. But overall, one would say that the GDP growth rate is still positive, especially driven by the financial sector, driven by ICT, and driven by the non-oil sector. But what is also important to note, and which is disturbing in my view, is the fact that in a situation or in a period when we are supposed to be enjoying the benefits of rising oil price, we are supposed to be seeing that translate to higher oil GDP. Unfortunately, we are witnessing a tank. The tanking of oil GDP. Oil GDP fell by as much as, if you like, witnessed a negative growth rate of over 26%. And that's primarily on account of the drastic drop in oil production. Tolu, first quarter of 2021, oil production was 1.72 million barrels per day on the average.
Yeah.
A year after, oil production has dropped to 1.49 million barrels per day.
True.
Okay, so why should we, have this kind of numbers when the budget, for example, the 2022 budget, has anticipated that we do on the average 1.88 million barrels per day. So at the rate of 1.49, that means at the end of the day, the budget variance will be a lot on the adverse side with respect to oil production. So it should worry us that oil production is declining when oil price is rising. So that's affecting oil GDP. That's also affecting oil revenue. So 1.49 is far below what we are projected, and it's going to, as I said earlier on, impact on entire GDP growth. If oil GDP had on overall GDP, okay, so it is dragging the, and that's why in terms of it's contributing just 6.63%. So is that non-oil side, especially but note that I'm really happy with the growth rates we are recording in agriculture. For me, it's still tepid. 3.16% growth rate in agriculture is still low, especially if you compare that with what the growth rates we even had during the recession we had in, I think, 2016, when agri GDP was even growing at the rate of, in excess of 4%. Now we are having it at 3.16%, even lower than what we had in quarter 4 of 2021. On a year-on-year basis when it recorded 3.5%. So the fact that agri GDP is also dropping, even though it's positive, because if you look at it quarter on quarter fell by 5%. Okay, if you put it another way, it grew by percent. And it's not that you now find that reflecting on inflation today is 16.82%, primarily because of the from the
All right, let's take output. Prof, are you there? Can you hear me?
Yes, I can hear you.
Okay, Prof, let me ask,
so
let's stay with the oil and gas space and this issue around production, vandalism, and all of it. What do you think can be done? Because we need to get the positives of the high cost of crude at this time. But the other thing that worries me is the issue of we not being a refining country. We import all that we use petroleum products. So whichever way, it still seems that we won't be able to get the benefits or the positives of high crude oil price. What do you think?
Yeah, the drop in oil production was attributed largely to vandalism, pipeline vandalism, and oil theft. Okay, since we know the cause, or we know the factors contributing to this, it stands to reason that the country should deal with it. The country should deal with pipeline vandalism. The country should deal with oil theft, because that's affecting oil production. Okay, and if you also look at that report, it talked about oil refining declining by as much as 46%. Oil refining is way in the negative territory, and for obvious reasons too. Why should we as a country, be importing petroleum products when we have established, refineries? Okay, now the government says they are rehabilitating, Port Harcourt refinery, the two of refineries we have in Port Harcourt, in particular, and from what we hear, that process may not be completed until the end of the year, and there's also this expectation that Dangote refinery will come on stream, to help out, but in the meantime, we need to deal with this issue of pipeline vandalism. We need to seriously deal with the issue of oil theft. We understand oil theft is going on, with the collusion of even those who should be, taking care of these things. So I think the issues are well known. Whatever I'm saying here is not something new. The government is fully aware. Pipeline vandalism is a challenge. Oil theft is also a challenge. We need to also move fast to ensure that we refine at least enough products for domestic consumption, that we end this regime of subsidizing fuel, because all of that are impacting negatively on revenue. They're also impacting negatively on our GDP.
Moving on now, some say that this growth is also driven by base effect, considering the fact that 3.11% year-on-year growth for Q1 2022 is driven by base effect, and there are cross currents that are slowing the momentum. Now, are we back to post? No, COVID still exists, of course, but do you think that it is now business as usual? Are we back fully to business activities across board? Would you say that we should expect more positives, talking about the GDP figures, as we move on with the present situation of things? China still has some lockdowns considering COVID-19 issue cases.
Yes, to a large extent, base effect played a role. The GDP figure for quarter one of 2021 was 0.51%. Recall that before then we had 0.11%, which was also partly responsible for the 3.98% recorded in quarter four of 2021. Now we are having 3.11 against a base figure of 0.51. So the fact that GDP figures were low for the last quarter of 2020 and the first quarter of 2021, of course, may have also accounted for the high GDP growth rates we are having now, which was why I said that for the second quarter of 2022, the GDP projection is likely to be lower than 3.11. And that's because the GDP growth rate recorded in the second quarter of 2021 was very high at 5.01%. So when you have a high base, you are likely to have a lower, GDP number, other factors remaining the same. So going forward, I wouldn't say we are out of the woods yet. Of course, we are not. That's a fact. Especially if you can take cognizance what's also happening around the world. Why is the MPC jacking up rates, the policy rates, by as much as 150 basis points? Is on the back of primarily on the back of what is happening around the world. The US is raising rates, European Central Bank raising rates, South African Reserve Bank also raising rates. And if you leave our rates the way they are, you're likely to encourage capital flight. You're also likely to prevent or it will serve as a disincentive for people trying to bring in capital into the country. I'm sure that's primarily why the MPC took that decision. So you find on the one hand trying to also rein in inflation, on the other hand stem capital flight, and of course defend the value of the naira. But having said that, I also think that the idea of pushing it by as much as 150 basis points will not help GDP growth. For me, is well too high. While I expected that the rate should be moved up, but I wasn't expecting anything more than 50 basis points, maybe 11.5 to 12%. 13% is way too high, and I think that's going to rub off negatively on GDP growth figure for the second quarter of 2022, and perhaps even the third quarter. As long as that rate remains high, you can imagine the multiplier effect of a high MPR on businesses, for example. So you would expect that the GDP growth rates for second quarter, especially with respect to the industry sector, is likely to be low. One other thing that disturbs me, Tolu, and I must mention it here, is the fact that we are yet to connect the growth that we are having. We are yet to connect it to the real sectors of the economy. You see major growth in the financial sector, but it's not yet linked to the real sector, and that's why we are having this high rate of unemployment. As long as the growth rate is not inclusive, okay, as long as it's not the type that enables jobs to be created, we'll keep having this issue of you're having high growth rates, and on the other hand, you're having high unemployment rate, you're having high poverty rate. Okay, so financial sector is increasing, is rising. Financial services sector, ICT, they're all rising. But if you look at the three major categories of sectors in the economy, you have agriculture, you have industry, and you have services. Services continue to dominate at over 56, contributing over 56%, to the economy, and that is where the growth is. We don't see growth in industry. As a matter of fact, the industry GDP, if you check it, is over -6%. So it is well in the negative territory. And as I told you earlier, the growth in agriculture is weak, and because it is weak, and you have industry negative, so the sectors we call the real sectors of the economy, okay, overall are not experiencing a strong growth. So the growth we are witnessing is just in the services sector. And remember too, that even these sectors, if you look at in terms of employment elasticity, okay, these are sectors, some of them are sectors that require specialist skills for people to move in, as opposed to agriculture and industry. So we should begin to think of how to link the growth we are having in the financial services sector, in the banking sector, for example, the growth in that area, to the real sector. And that is where, again, the monetary authorities have to come in. The central bank must continue to step up its loan to deposit ratio. At the moment is 65%, and find other means by which the banking sector, should increase lending to the real sector. Part of what has happened now is going to affect it, the increase in the MPR, because what it means is that the effective lending rate has now gone up to 14%. MPR is 13%. If you add the 1% asymmetric corridor, that's the 100 basis points, you now have effectively standing lending rate is now 14%, something that used to be 11.5 plus 1, that's 12.5. And of course, that will also mean the banks generally will reprice their loans, and lending to the real sector will suffer the more with what has happened now. So both the fiscal and monetary authorities must join hands together to ensure that the real sector gets these facilities. And The central bank, yes, has been doing a lot to intervene directly, lend a single digit at 5%. But what you find out or what you realize is that from what we hear, number one, the scale is small compared to the magnitude of the problem. And number two, some of those facilities too don't, if you like, get into wrong hands, not to the people that really need them. Okay, so there has to be a conscious effort to ensure that the real sector is enabled.
All right,
that is the way you can link the growth we have in the financial sector to the real sector. That is the way you can reduce unemployment. Because whatever you do that is not inclusive, you have a lot of people, falling out of jobs. Okay, and then you say your economy is growing. For me, it doesn't make sense at all. That growth must be inclusive, because if it is not, you're also widening inequality, and that's a problem, and that's where you have a very big challenge when inequality is being widened. Yeah.
I must thank you so much. Brilliant conversation. It's always interesting talking to you, Prof. I appreciate your time. They're speaking to us extensively on the GDP figures and what it means for the country. He's the president of the Association of Capital Market Academics of Nigeria. He's also a professor of capital market and economics. Thank you so much for your time, Professor Ken. Professor Uche Uwadike, thank you for your time, sir. Thank you, sir.
My pleasure.
Yeah.